We got our second batch of inflation data this week. It is Thursday, June the 11th, and this is Markets with Megan. If you like this podcast, you can subscribe to it below. You can hit that alarm bell. Also share it with your friends, family, colleagues, anybody who wants to dig into the details from the economic data that makes the headlines on a regular basis and what it means for the markets. So let's dig in today with the second piece of inflation data that we got for this week. Remember, yesterday we got the consumer price index. Today we got the producer price index. And what it showed is that producer prices for May, they rose 1.1%. Now that headline number is primarily driven by gasoline, oil. We know that story. But when you strip out food, energy, and trade, these components that are very volatile, it rose 0.8%. So on a month-over-month basis, we're rising at the fastest pace since 2022. When you look at it on a year-over-year basis, prices are rising 5.1%. Again, the highest since 2022. Now, some of this will filter into the Fed's preferred inflation reading. That's PCE. Airlines were up about 2.5% on an annualized basis. Healthcare is going to add about 4 basis points to PCE. And then the big story was portfolio management fees. And these tend to rise when the equity markets are higher, as fees are based off of an assets under management. So that was up 4.8% on an annualized basis. The other big thing, key takeaway from this report is that it's showing that the upstream costs or what businesses have to pay for to produce their goods is rising at a pretty rapid pace. We haven't seen it completely filter into the consumer yet. There tends to be a lag, but the question is, will it filter into the consumers or are consumers going to hit back? And someone's going to have to eat that cost. So at the end, that could be the companies or the producers. That's a concern there for margins and margin pressures. So we do think that this still all around shows a pretty ugly picture for inflation. Some people are saying, hey, it's not as bad as we thought, but it's pretty bad. Let's just put it that way. So this is going to keep the Fed unlikely to do anything at next week's meeting. The new chairman, Kevin Warsh, will come in. We'll get a little bit more indication from him on what he sees. Is he going to be hawkish like the rest of the committee? Is he going to downplay these supply shocks and the shocks because of the geopolitical tensions? Or are we going to get a hawkish Kevin Warsh? And this is something that he was for a very long time prior to coming and taking this role. That meeting's next week. We'll have one more piece of economic data for the week tomorrow, and it's the preliminary reading on the University of Michigan Sentiment Index. Today, the markets have rebounded after a couple of pretty weak days. We still do see a lot of uncertainty around what's going to happen, a lot of news coming out of the White House with potential attacks on Iran. So we'll wait and see with that. But today, I think there's just a little bit of a bounce from that weakness and then optimism around the SpaceX IPO that's supposed to launch tomorrow. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.